Hey traders, Cousin Vinny coming to you on Good Friday. I hope you guys have an happy Easter. This is the second part to becoming a better trader. Basically, I want to cover analyzing a chart. When analyzing the chart, the first thing a new trader should be determining is whether the chart is trending or not, or whether it's basing. Basing patterns come in many forms. The chart here shows Sherwin-Williams, and we can see where we based above the Kumo, we trended down, based below Kumo, and then trended back up before we based again. In this last base, in this weekly chart, we finally break out, and you can see there's a period of trend that we put in from January until middle of May before we started to break that trend. So as a trader, the first thing you want to do is look at a chart and tell where we are in terms of a base or a trend. Let's take a look at Celgene. With Celgene, we can see that we put in these lows and these highs. We moved sideways and we created this base. We put in a higher low. And looking at stochastics, we very readily could see that we're either going to break out or fail. In this case, we broke out and we started trending again. We trended for 1, 2, 3, 4, 5, 6, 7 days, 7 trading days, and we started to move sideways, running along the 20 period before it broke out again and trended higher. And you could have scaled out of half of your last position, or you could have got in here and exited as soon as we had our first red candle, or using some other indicator, perhaps a momentum indicator, Fibonacci, or so forth. But for the basis of this particular video on how to become a better trader, you need to start looking at charts and be able to determine whether we're in a basing pattern or a trending pattern. It's as simple as that. Let's take a look at another chart. Looking at Home Depot, we can see that we had a triangle base here back in 2011. We broke out. We trended higher. We put in another descending base where we came down to the 50 period, and then we began to trend again before we started to base here. Now we had some smaller places here where we moved lower, basically not breaking trend, but we moved lower to a moving average, and then we began to move higher again. Then we based sideways for a period, trended higher, based sideways, and started trending higher. So the object here is for a trader to recognize when they see a base or when we see a trend. It's as simple as that. In Micron, we can see with our stochastics oversold and turning higher that this sideways base, we broke higher, we started trending, and then we started basing again. Stochastics got oversold, and we were looking for this base. We were anticipating that we would either come to the 200 and bounce, which we didn't, but we came down to the 50 period moving average and bounced. So when we broke out of this pattern here, that was your signal to go long, and you waited for this trend to either give you a sell signal or to start basing again, which is what it did here. So the object of the trader again, to become a better and more profitable trader, is to recognize when we're trending and when we're basing. When we're trending and when we're basing. Simple as that. I hope this helps. Take care, and remember to tune in to my Stock Twitch channel or Day Trader Bootcamp, where we discuss these types of trades during the day. Or you can come and check your 2-week free trial, or check out my YouTube channel, Cousin Vinny Day Trade, no spaces.